Allegedly, I'm live. Apparently. What does that mean? I don't know. Let me move that closer. I have no idea what's going on. This is the first time I've ever done it on YouTube. Usually I do it on Zoom. And YouTube has way more options going on. So this is immediately overwhelming. Am I coming through loud and clear? That's kind of like the first thing. Wonderful. Richard, good to see you. Tom, Brock Way, who was voted Paraguay's #1 investor by Invest Paraguay this quarter. So that's pretty cool. Luis, good to see you, my friend. And what I expect is to get a bunch of people in 20 minutes when the email goes out saying that I'm live. But as of right now, I'm just going to drop this in the Discord for OCA and CGM. And there's a few things I wanted to yap about today. The first is AI bubbles. Are we in one? What does one look like? Is Michael Burry going to take us all down? The second is like more sort of high-level commentary on a market pullback. We'll talk through some China stuff as well. As many of you know, I was in China for a few weeks at the beginning of October. And so learned a ton of stuff that I think will be relevant and useful to everyone here. And then we'll wrap up with some other cool things that are going on here at Freeman Publications. Some things that we are doing, particularly next year, next May. Some of you know what I'm talking about, others may not. So we'll cover that at the very end. Daryl, Irene, Don, good to see you. I've got it so you have to be a subscriber to write in the chat just to avoid spam messages. So if you're wondering how do I write in the chat, you've just got to be a subscriber to the channel for more than 1 minute. And that's what you need to do. I see a bunch of familiar names, which is good. Shout out to Random Stuff, who has the best username so far. Diane, thank you. We've actually never come up with a term for Freeman Publications fans or groupies. And I've never been able to come up with one. So if anyone's got any suggestions, they'd be very much appreciated. But first things first, to those of you who are in the chat, on a scale of 1 to 10, 1 being, what are you talking about? This is a bear market, to 10 being, this is the biggest bubble of the last 20 years. Where do you think we are on the hype cycle? Freebies, that's actually not a bad name. We got some 5s, we got some 7s, we got some 6s, we got some 7s. Richard's AI or the market as a whole? The snarky side of me wants to say that's the same thing. But particularly, I'm talking like big tech, AI, NASDAQ, semiconductors, which is a big portion of the market as a whole, to be honest. You know, I've got a bunch of different stuff to share, but let's just take a look at the SPY today. So if I can figure out how to share my screen on this thing. Okay, can we all see this? Ah, I see. Oh, okay, that's very clever. Right. Okay, cool. So this is the SPY as of today. Weightings. Nvidia 8%, Apple 7%, Microsoft 6.5%. So we're already at 21.5% of the S&P 500 in the top 3 companies. 4.14 for Amazon. We'll round that up to 3. We'll say 4 and we'll say 3. So another 7. So 28.5% in the top 5. Google's there twice because of A shares and C shares. So we'll call this one another 5%. So the top 6 are 34.5% of the index. Plus Meta, we're at 37 for the top 8, 39 with Tesla, and rounding out the top 10 is Berkshire Hathaway. So 40% of the index is in the top 10 stocks. And of these 10, I would say 9.5 of them, and yes, I know Google's there twice, but for the sake of brevity, from the top 9 then, 8.5 of them have risen on AI optimism. I say half because Berkshire Hathaway had a big Apple stake. They also had the Taiwan semiconductor stake for a couple of quarters, but then they foolishly ditched it. But basically, Berkshire Hathaway is the only one of these who hasn't benefited from a lot of AI optimism. The rest of the index hasn't really done a lot. If we look at the balance between earnings for what we're going to call the S&P 10 versus the 490, the S&P 10 is driving an outsized amount of the growth. About 60% of the earnings growth in the S&P 500 is for those 10 stocks. Now, when we're talking about this, it sounds a bit frothy, right? And then we come out beginning of the month. Michael Burry's got a short position on Nvidia and Palantir. The Palantir one is far bigger, but he has one on Nvidia as well. He also has, as he said, a bombshell announcement coming out on November the 25th, which has something to do with all of the hyperscalers. So Google, Amazon, Microsoft. He also put Meta and Oracle in there as well. Give me a 1 in the chat if you saw his latest thing about the hyperscalers and depreciation, or a 2 if you did not. Oh, this is fun. I like YouTube Live. Oh, so no one saw it. Okay. Well, I should probably share it then. So this was the tweet, and this was 2 days ago now. It says, understating depreciation by extended useful life of assets artificially boosts earnings. It's one of the more common frauds of the modern era. Massively ramping capital expenditure through purchase of NVIDIA chips and servers on a 2 to 3 year product cycle should not result in the extension of useful lives of compute equipment. Yet this is exactly what all the hyperscalers have done. So what he's saying is all of the companies listed here, and as you can see in this chart, in their earnings reports have increased the useful life of the GPUs that they are buying, primarily from NVIDIA. So you see in 2020, Meta had 3, Google had 3, Microsoft had 3. And now in 2025, Meta puts the depreciation at 5.5 years. Google puts it at 6, Oracle 6, Microsoft 6, Amazon 5. And so what he's saying is, because the depreciation smooths out earnings, in the long term, these companies are going to overstate their earnings potential. Now, this is not like new information that he's come out with. Like he was not the first person to the screen's gone back. Oh no. David, the problem is, mate, I can't see anything. I'm already seeing an issue here. I can't see. Bloody hell. What if I do entire screen? What if I do that? I can't believe I've done that. That's really annoying. That's even worse. I don't want to do that. Oh my God. Who does YouTube Live, man? This is awful. Right, I'm going to try it one more time, and if not, we're going to have to roll with it, like Oasis. Can you see Michael Burry's Twitter right now? And then I'm going to come back to my other screen. Are we good? Same thing again? Oh my bloody God. Ridiculous. So I'm confused. People are saying no. People are saying yes. Are we okay? Is life good? Can you see me in the bottom corner? Oh, this is lovely then. Fantastic. So allow me to just go back to what I was yapping about. So now, Michael Burry came out with this a couple of days ago. And he said, these hyperscalers are all understating depreciation. In other words, they are extending the life of the GPUs that they're buying primarily from NVIDIA. And the reason they're doing this is to artificially increase earnings. Now, there's a couple of issues I have with this. The first thing is, he's not the first person to ever talk about this. Like he's not the first person to discover this. This isn't some sort of like hidden information. This is in all of their public filings. The second thing is, this isn't true. Like the useful life of a GPU, the study that is used here was a study by Meta in 2023. And they were running tests on Llama 3 at the time. And they said, after 3 years, 27% of the GPUs were no longer useful. Or in other words, after 3 years, 73% of them were still useful and still operational. So they're not the only company to do that. As you can see, all these companies have done it because the GPUs fundamentally are better now than they were 5 years ago. And so a useful lifespan of 4, 5, and even 6 years is not unreasonable. And it's also not unreasonable for depreciation to be that. And as you can see here, all of these companies did it. So it's like, are they all complicit in the same fraud? Or is it just the technology's getting better? Because I wrote about this a year ago when I said, oh, hey, Google's earnings were really good this month. Here's why. Because they extended depreciation to 6 years instead of 4. So unless he's got like some more bombshell stuff, this to me is a bit of a non-starter. Give me a 1 in the chat if that makes sense. And now you can all see me again. Wonderful. Shout out to Richard, who has a little crown emoji. Yes, David, it means the margins will be better. If they had extended it to 10 years, I think he might have a point. But he actually came out earlier today and talked through his short positions. He has Palantir puts at the $50 strike and Nvidia at 100. And those both expire at the beginning of 27. So he's got a year for this thesis to play out. And like I said in the email that I sent yesterday, he's not an altruist. He's not doing this out of the kindness of his heart. He's doing it to make money. And he's been right a few times, most famously in 2008. And he's been wrong a bunch of times as well. You know, he's continually been bearish on Tesla all the way up. He's continually been bearish on the broad market all the way up for the past decade. Even when we did get the big dive in 2020 because of the pandemic, he doubled down and said it was going down way further, which at the time wasn't even really a contrarian take, but he got that wrong. But I think the bigger question is this a bubble? And so I did some digging, because what a lot of people are comparing this to is the .com boom, bubble, bust. So a lot of times people like to say, well, if you'd have bought the NASDAQ at the absolute peak of the market in March of 2000, you would have been underwater for 15 years. And that is true. That is true. You'd have had to have absolutely horrible luck to buy at the absolute peak of the market. Just like you'd have had to have absolutely amazing luck if you bought at the absolute trough of the market. But to me, it's not about like when the peak was, what happened then. It's more about what happened leading up to it. Because then we can kind of learn from that and think, okay, is this a similar situation or not? So what I did was I got the quarterly returns. Can I go back? This is proving to be very annoying. Oh, it does go black, doesn't it? Richard, absolutely, he can close the options for a profit. And I do believe he's manipulating the market. One other thing that I didn't mention was he filed that 13F filing 2 days after the quarter ended. And someone far more diligent than me went back and looked at the dates he filed all the other 13Fs for his fund. And going back about 10 years, they filed their 13F reports, which is if you have more than $100 million of money under management, you have to file a report with the SEC to say what you own. And for the last 10 years, Scion Asset Management, which is his company, has filed their report 24 or 25 days after the quarter end. Every quarter for the last 10 years. This quarter, they filed it 2 days after the quarter end. So I actually want to not share this one and share another screen that I've prepared instead. So this is Palantir's stock price over the past 6 months. So we know he has taken these positions on somewhere between the beginning of August and the end of October, because they weren't in the previous quarter's report and they were in this one. So he had to have put them on in the last quarter. So between the 1st of August and the 31st of October, those positions were put on. What happened to Palantir between the 1st of August and the 31st of October? And the chat's gone completely silent. So I have no idea what's going on. Maybe I'm an idiot. I'm having an internal debate of whether I ever do this on YouTube again. Whether I just stick to Zoom. Everyone's still here. What happened to Palantir between the beginning of August and the end of October? Thank you. Finally, someone said it. The stock went up, right? And so if he's got out of the money put options, what happened to his out of the money put options? What happened to the value? They went down. He's losing money. So it is in his interest to declare as quickly as possible his put options, because the peak of Palantir, which peaked at about 207, was on November the 3rd, which was the day Michael Burry announced that he had his short positions. So there you go. Self-interest is always going to be the number one motivator for human actions. David says, if he does try to manipulate the market, he will lose credibility. I don't think so. If it's one thing we know about Michael Burry, it's he really likes being famous. And he really likes people listening to him. Because otherwise, he wouldn't declare these massive positions on Twitter. He actually volunteers more information than he has to. So I don't think he cares, as long as he makes money. You could argue between 2006 and 2007, he had no credibility at all. And then he gained all of it back. Because, as I said in the email, like, you don't just have to be right when you take these positions. You have to be right in the right time frame. He's got to be right before the end of 2027. And I think with the Palantir one, he has a much higher chance of being right. With the NVIDIA one, I'm not so sure. Give me a 3 in the chat if that was useful, eye-opening, helpful. Fantastic. Sneha, I will look at Rigetti, if you like, in a little bit. Shout out to Charlie Cruz. I know who you are. So the other thing I wanted to look at was so this is the quarterly returns for the NASDAQ in 99, 2000, 2001. And one of these is not like the other. What number stands out to you there in all of this? Remember, we peaked in March of 2000. Because I'm looking at this, and when I was looking at this data and putting it together, I was like, hang on, what? Was it really that much? In Q4 of 1999, the NASDAQ, not an individual stock, the NASDAQ was up 53%. 53. Then it went up another 13% in Q1 of 2000 before we eventually peaked. And actually, that 13% was in the first 2 months because we peaked. I believe it was 4th of March 2000 was the peak of the NASDAQ. Helen's telling me frozen screen. What does that even mean? What does that even mean? Are we good? Fantastic. So you see here, 53%. That's insane. %53 in a quarter for the index, not an individual stock, the index. Like, bubbles don't burst when everyone feels terrible about the market. Like, that's the most important thing. Bubbles burst when it's mass euphoria, not when everyone's panicking. Like, we only have to go back to the end of 2021. And those of you who are investing, and some of you were with us during that time period. And I want you to remember back to that time. It felt like you couldn't miss. It felt like every single stock you bought would double within 6 months. And a lot of them did. And we had some ridiculous names that were up stupid amounts. But they didn't have the corresponding fundamentals to match that. And so I'm just going to go to another screen. I'm not going to share this one. Well, actually, I might do because I think it might help. Can everyone see that on Perplexity? So I've got the quarterly returns for the NASDAQ from the beginning of 2023 to now. So as we're coming out of the bear market in 2022, we have the trough in November of 22. Maybe it was the end of October, actually. I'm trying to think. Because I bought Meta on the 27th of October. And that was basically the bottom. So Q1 of 23. So we're coming out of the bear market, 19%. Q2 of 23, 13%. Q3 of 23 went down. Q4, 13%. Q1, 10. Q2, 7. Q3, 1. Q4, 7. Tariffs come in. We're down 8% beginning of the year. Remember that? We recover 15% in Q2, 9% in Q3, and we're about halfway through Q4 and we're about 3%. To me, this doesn't seem like irrational exuberance territory. But the thing you've got to understand is, even during bull markets, you get pullbacks. Between 1995 and March of 2000, the NASDAQ dropped 10% every single year at some point. It dropped 20% in 2008, not 2008, 98, because of the Asian financial crisis, long-term capital management blowing up. Dropped 20% in 1998. And that was in the middle of a massive bull run. It continued after that. So my point here is, I truly don't believe this is the tippity top, because it would just feel a lot different if it were. If you're feeling hesitation, if you're feeling worry, like that's not how bubbles burst. Just go look at interviews with people who were mortgage brokers in 2006, 2007, 2008. They weren't the ones saying, oh, we were really worried, actually. It was, oh, yeah, everything was great. It was free money. Couldn't stop. We were buying fourth homes. And then over a matter of months, it unwound very quickly. And yes, a couple of very, very smart people, including Michael Burry, did see it coming. And Richard nailed it. I want to read out Richard's comment. And also Sam's comment above it kind of like piggybacks onto that. Can you piggyback when you're the first comment? I don't think so. But they kind of say the same thing. You got to go back to the fundamentals disconnected from share price. And Richard says, if you look at the PE for almost any share, there's invariably a big difference between the highs and lows each year. Much of it is sentiment driven. And as my trusty research assistant says, you're absolutely right. If we look at some of these stocks and we look at PE ratios, I don't think these are necessarily obscenely unreasonable valuations. And it appears to be when I switch tabs, everything breaks. So let me know if you can see NVIDIA here. Sneha, bubbles burst because everyone is done buying. There's no buying pressure left. So NVIDIA is trading at 32 times forward earnings today. Which I don't think is unreasonable for what is arguably the strongest company in the world right now. Now, forward earnings can always change if the earnings themselves don't match the expectations, but NVIDIA has continued to not only match but exceed expectations every single quarter for the past 3 years. So it's like you've got what you can argue is the best company at the market trading at 32 times forward earnings. I don't think that's unreasonable. Like, I'm not calling Anthony out here. I'm just using this as an example because I've learned more from Anthony than any other human on this planet over the past 3 years. So it's like you can buy Chipotle at 26 times earnings for a business that is in a much worse position. I know which one I'm buying 100 times out of 100. Because I talk about this all the time in CGM, like a stock can be cheap at 31 times earnings, and it can be very expensive at 26 times earnings. Because you can't just go on one single number. And that applies to the market as well. You can't just say, oh, the market's PE is 26. That's high. We're going to crash tomorrow. That's not how it works. And also, I did a talk about this at Investor Mania where I said, over the long term, I just think the average PE of the SPY is going to trend up indefinitely because of how people now invest into the SPY. David says, why are people paying so much for those companies? Which companies specifically? And just as like a meta thing, small m, the more specific your question, the better answer I can give. Costco or Walmart? That's a great question, David. So let's look at Walmart. Walmart's trading at 37 times next year's earnings for a company that's growing at 4% a year top line. Bottom line, really impressive. Dividend, pretty good. Let's look at the cash position. Cash flow, good. Free cash flow, pretty decent. Balance sheet wise, pretty good. Can you actually hear Ivy? No way. Can you actually? Oh, that's so cute. Because what YouTube doesn't do is doesn't have the Zoom. Zoom actually muffles all the background noise, which is very useful for me. But hey, if you enjoy hearing my daughter downstairs, then that's like a plus, I guess. But my point I was trying to make is, just based on these numbers, I find it very difficult to justify paying 37 times earnings for Walmart. When I can buy Nvidia using a one-to-one overly reductive valuation comparison, Nvidia is cheaper. And like I said at the beginning of the call, these are the companies driving the index, right? Let's take a look at Meta. 20 times next year's earnings, 26 times last year's earnings. Like, let's take Burry's thesis in the context of this. If Meta was trading at 80 times earnings, then I think he would have a very valid point. But it's not. And even at its tippity-toppity peak of about 750 a share, it was trading at what? 26 times earnings? So I just don't buy this all AI spending is a bubble. Because you have to believe, if that's the case, that all of this AI spending is wasted. And I'm sure some of it will be wasted. But for all of it to be wasted is a massive stretch. I mean, just think about this anecdotally. I couldn't get GPT-5 to give me an answer for something yesterday because the servers were throttled. Like, a lot of people are using these platforms. If it was very easy, then they might have a point. But do we see what I mean here? Give me a 4 in the chat if this is making sense. And David, to sort of circle back to your question and answer it, why are people paying so much for Costco and Walmart? I think a lot of times people buy stocks based on name rather than research, to be honest with you. They're like Walmart, safe, done, don't care about the valuation. Costco, safe, done, don't care about the valuation. Which if you have a extremely long time horizon, that's not the worst way of approaching it in the world. But I don't think it's what people should do. I think you got to look at every single fundamental metric before you buy any company, even if you just say, oh, I've got a really long timeline. Because if you've got a really long timeline, that doesn't necessarily mean you're willing to go through a 50% drawdown just because the PE ratio condenses. Like we've seen it with Tesla in the past 5 years. Those of you who have ridden that roller coaster, me being one of them, there's only been a couple of times as a Tesla shareholder that I've been concerned about the direction of the company. But there's been a lot of times where the stock has tanked and I've been like, yeah, cool. John says, thoughts on interconnected deals and investment in the AI industry? Any concerns? I know what you're referring to. It's that bloody image everyone keeps sharing. It's in YouTube thumbnails as well. It looks very clever, doesn't it? And I think there is a degree of that. But I don't think it's the giant problem everyone makes it out to be. It is specific to like 2 firms, essentially, or 3 actually. And one of them isn't public. Like the OpenAI AMD deal, for example, I wasn't a fan of at all. I was like, that kind of sucks for AMD. And for example, if OpenAI was public today, I definitely wouldn't be buying it. But on an industry-wide level, no, I'm not concerned. Like, for example, on an industry-wide level, I would argue that this is maybe the most important company in AI. And I can buy it for 23 times earnings. I don't think that's bubble territory. If this was called American Semiconductor Manufacturing Company Limited, it would trade at 46 times earnings. A couple of years ago, you could buy this thing in the low teens, and many of us did. And Richard, you're absolutely right, mate. Walmart's growth projections, no matter how you spin them, do not match up to paying 37 times earnings. And don't get me wrong, I do think the quote AI bubble will burst at some point. I just don't think it'll be next month. Because the rest of the signs aren't really there. There's concentration in a few companies, one of which gets all the press and isn't even public. This is OpenAI. I'm talking about OpenAI, by the way. But would you like me to talk about something that I do definitely believe is a bubble, and I do believe it's going to burst a lot sooner rather than later. Would you like me to talk about that? Oh, JC, I got some plays for the energy thing. Believe me. Saving those for members of CGM though. So, someone asked me about these guys. Rigetti Computing. And that also includes these guys. D-Wave. That also includes these guys. All of the quantum stocks that have been up and to the right. Not for me. Not for me. Who here is familiar with something called Amara's Law? Give me a 1 if yes, 2 if no. I'll write it in the chat because sometimes my accent confuses people. Even though I think my accent's delightful. So a lot of 2s. Amara's Law is the tendency that we have as humans to overestimate the effects of a technological advancement in the short term and underestimate it in the long term. So when a new technology is developed, we think it's going to have far more impact than it does in the short term, but we also can't fathom how much impact it's going to have in the long term. So like the internet, for example, you see all those pictures that people post, like one of them was, who was it? Like the head of IBM. He was like, I think there'll be 5 million computers in the world, tops. Those news articles where it's like, is the internet over? People have kind of stopped using it. And that's in like 1997. But we also get like the mass euphoria, the pets.com. So it's like, we can look back on stuff and laugh because it's like, what do you mean there's only going to be 5 million computers in the world, you idiot? There's like probably more computers in the world than people now, and they're this big. But the quantum thing, so all the quantum stocks, they jump whenever there's like a good bit of news about quantum computing. Like, what was the one that happened a few months ago? There was a paper that came out, because they're all research papers. They're not like commercial developments. A research paper that came out and said, well, in theory, we can use quantum computing to break the Bitcoin algorithm. And Bitcoin will be worthless if that's the case, because we can invalidate the double spending problem that Bitcoin has solved. And all the quantum stocks jump on that and Bitcoin goes down. And then whenever Google has some sort of quantum computing breakthrough in their research division, all the quantum stocks go up. But you've also got to think about this stuff. So IonQ has a market cap of $16.25 billion and a revenue of $79.84 million. Now, don't know about you, there's a bit of a disconnect there. And by the way, all of these companies, all of their revenues is research grants, not commercially viable products. So you're going to buy this stock and you're going to ride the roller coaster based on eventually they might figure it out. And by the way, there's no guarantee that if quantum computing does become commercially viable, that these guys will be the winners. There's no guarantee of that. Just because they're the first ones to list publicly does not mean they're going to be the winners. So if you want to talk about bubbles and bursting, my money's on this stuff. $8 billion market cap, $7 million of revenue. That is a price to sales of over 1,000. Not price to earnings, price to sales. So I ain't touching it. Because if I'm going to buy a stock for the long term, it's going to be a fundamental decision. And if a company has no fundamentals, then I can't make a fundamental decision. Like, and I don't think anyone should be paying 1,000 times sales for anything. No matter what the promise is. You know, we all laugh about OpenAI. OpenAI has never traded at 1,000 times sales on the private markets at the very least. 100 times sales, yeah. But 1,000? Come on. So yeah, me, quantum computing, no thanks. And I've seen this story before. 3D printing. Remember that? When 3D printing was going to take over the world and all these 3D printing companies were trading at obscene valuations? And I hope everyone here can see the difference between like a Rigetti computing and something like Nvidia or Microsoft or Meta. I really hope that that's apparent. Give me a 4 in the chat if this has been useful so far. If you're having a good old time hanging out. David, I'm going to hold you to that. And I'm going to ask you to cut me a check. Daddy needs a new jet. Also, diapers are very expensive these days. And Ivy is going up a size. You know how it is. You got kids. So I want to change tunes a little bit. So one of the things, David says, I expect returns. Sorry, mate, there's no guarantee of future returns here. This is the financial markets, my friend. So last month I went to China. I was there for a couple of weeks. A lot of fun, very interesting. But whenever I go away, it's not just a jolly. These things have reasons. Things have a purpose. And the Chinese market, as it pertains to stocks, has always been a tricky one. You know, I've spoken to a lot of people over the last few weeks, especially in CGM and in the options program as well. A lot of people have been burned in China before. And even like some of the massive names, for example, Alibaba, when it went public in 2014, largest IPO ever at the time. They raised 25 billion on day one. Then the stock was flat for 10 years. It's done pretty well in the past year. But even then, it's like massively underperformed all the indexes. And then, you know, a lot of people got burned on like the Chinese tech boom. Stocks which did once again pretty well in 2021 when everything was up. Then they massively unwound. I'm not sharing my screen right now, so don't worry if you can't see anything. But if you look at KWEB, which is the China Internet ETF, down 47% in the past 5 years. And I'm going to compare it to the NASDAQ over the past decade. Let me know if you can see that. So I think I'm blocking the bottom. The NASDAQ is up 5x in the past decade. The China Internet ETF KWEB is up 26%. So a lot of people have been burned in China. And for many reasons. I've talked to some of you about how the actual Chinese stock market, like the way listings work in China, is actually very, very detrimental to individual investors. There's also the fact that I think a lot of times we as investors kind of like misunderstand other markets. One thing we've done really well in Capital Gains Multiplier is actually capitalize on growth companies in foreign markets because the US market misprices them. Companies like Nubank, Mercado Libre, C Limited. But if you've got the stomach for it, I think there might be a couple of opportunities. So before we go into the equity side of things, we got to understand this in broader context. So the Chinese government and the Chinese economic system is centrally controlled. In other words, the government has a very big say in how things work, which is very different to the United States and many of the other markets we invest in around the world. Now, it is still a capitalistic system in that there is private ownership, there is a stock market. So even though the name of the party is the Chinese Communist Party, this is not the communism of the 1950s. This is not Mao. This is not Stalin. This is a very different brand of communism. But it's still centrally controlled. And so every 5 years, the government releases what's called the 5-year plan. And we are now on the 15th 5-year plan. That came out a couple of weeks ago. Coincidentally, while I was there, didn't plan it like that. But hey, sometimes coincidences work in your favor. So the 5-year plan this time round focuses a lot on being a, as it says here, self-reliant tech superpower. So what does that mean? Well, in the context of what we've been talking about, we can't expect, for example, the hyperscalers, the Amazons, the Googles, the Microsofts of the world, to get a huge amount of Chinese business. But also, China is going to develop, but they are going to develop internally. So there is going to be a lot of money for native suppliers. So China has their own hyperscalers. You've probably heard of quite a few of them. Alibaba, Tencent, Baidu, ByteDance. I know David's a big fan of ByteDance because he does those TikTok dances all the time. But those guys are also spending huge amounts of money on infrastructure. They all have their own cloud divisions. So very similar to AWS, Azure, Google Cloud, they all have their own. And up until now, they have largely relied on a mixture of Chinese suppliers and US suppliers, NVIDIA being one of them. Now, as some of you may know, NVIDIA basically were quote unquote banned from selling chips to China. It's not that black and white. But NVIDIA came out and said, you should expect our market share in China to decline by 90% in the next 12 months. So China revenue for NVIDIA is basically a non-starter right now. Like there's not enough for it to be materially relevant. But someone's got to take the place of them. The hyperscalers, they still need GPUs. GPUs have got to come from somewhere, right? And there are firms that manufacture them. One of them is Huawei, which is private, so of no use to us. But there are others. So this is strictly a high risk, high reward type of investment. So you have a company like Cambricon, for example. This has sometimes been called the baby NVIDIA, the NVIDIA of China. But these guys, they supply ByteDance, company that owns TikTok. They supply their cloud operations with GPUs. And so if more of the Chinese tech sector gets internally focused, then firms like Cambricon are likely to benefit. David says, did you mention during the last CGM call that the closest flash memory chip computer company is 6 years behind? It's 4 years behind. So Changxing Memory are about 4 years behind the big players, which is Micron and then the other two, which I'm not allowed to say. But yes. But the thing is, if they're only focused on the domestic market and not the foreign markets, it doesn't matter. Because the domestic market isn't buying anything else. Domestic market isn't buying from Micron. They were a few years ago. But this was part of the Micron story that we talked about. Like Micron did have a lot of China exposure. It has less and less and less now. Because the Chinese hyperscalers are moving towards Chinese domestic manufacturers. And not the ones in the US or Korea. There is another Chinese company that I like. And it has to do with electric vehicles. And no, it's not who you think it is. So has anyone here bought Chinese EV stocks in the past? Follow-up question to that. Has anyone here been burned by Chinese EV stocks in the past? Because, you know, you had all the big names. 2021 was a wild time. 2021 was insane. Remember? If you weren't investing in 2021, let me tell you, it was wild. People genuinely believed that there was a chance that NIO would be bigger than Tesla in 5 years. Chris says, I bought BYD in 1990. Is that date correct? I didn't even know they were public in 1990. I thought they went public in the mid-2000s. And for a long time, BYD was the only decent... Oh, 2020. Chris, come on. Why do people do this to me on these streams? This is like when Daryl told me he had NVIDIA puts when he had calls. Oh, goodness me. Yeah, I mean, Berkshire had it in 2007, I believe. Have they exited their BYD position now? I have a feeling they have. But a lot of people have been burned by these Chinese EV companies. and for good reason. Once again, stupid valuations, but also a lot of it is not understanding the ecosystem. Like, I think there was, and I'm not talking about anyone in particular here, I'm talking about like the retail investor world as a whole. There was a massive misunderstanding of the Chinese EV ecosystem. I think a lot of people thought there were about 6 firms. No, there's about 60. The vast majority of them are private, and the vast majority of them are partially or wholly state owned. So it's not just NIO, Xiaopeng competing against Tesla and BYD. No. There's many Chinese EV companies. The competition is extremely stiff. And let me tell you, those cars on the surface are phenomenal. You know, I had a ride in the Xiaomi U7, which is a $45,000 vehicle. And if you'd slapped a Porsche logo on it, I would just believe it was a Porsche. And if it was $145,000, I'd believe you. It is that good. And as Richard says, a bit like the number of car companies in the US in the early days of car manufacturing, how many are left now? Because in these boom periods, we have all these companies appearing, and then we have the consolidation period because the market can't support all of them. And we saw this in the US as well. You know, Nikola had to wind up operations. Workhorse had to wind up operations. Then you've got other companies just doing deals to be absorbed. You know, I've long said, I don't think Rivian will be around in 5 years. I think Rivian will get absorbed into something else. But so when I'm looking at this stuff, I'm thinking, well, there's like 45 Chinese EV companies. And they all seem to be doing about the same thing. So how can I profit from this? How can I make some money? And it goes back to, you know, how I talk about thinking about AI investments. I don't know which large language model is going to win. I don't know. I don't know if Anthropic is going to be worth 300 billion. I don't know if OpenAI is going to be worth $1 trillion. I don't know. I don't know. But what I do know is there are ways to be agnostic and still benefit. When we talk about AI, we talk about the chip manufacturers, you know, your Taiwan Semiconductors of the world, NVIDIA, ASML. But we also have this in electric vehicles. What am I talking about with electric vehicles? EV or ED? Whew. Mate, I know it's 5:10, but can we keep the blue messages to a minimum, please? Might be kids watching these streams. John and Gary says parts. John and Gary would be correct. What would we say is the most critical part of an electric vehicle? John and Gary on the ball again. The battery. Big battery company went public this year. Can anyone tell me who? It was the largest IPO in the world. Florian, shout out to Florian. He's got me up on the big screen. David, don't get me started on that. I promise no rants on here. I promised myself no rants. I've only got 6 hours left of this. No rants. But it is the batteries. And a lot of people are getting excited by these like rare earth trades, which some of them may have merit. I don't think most of them do. But you can just buy the battery companies instead. Not category leader. What's that? What's that rubbish? There we go. This is the wrong listing, but CATL is the company. Contemporary Amperex Technology Company. This company is listed in Hong Kong. They are Tesla's battery provider. They provide batteries for many, many Chinese EV companies. They also have minority stakes in some of them. So even if the company is partially state-owned and does well because of that, no guarantee of that, but if it does, CATL will benefit. And like, if you are bullish on EVs as a whole, this is one of the better ways to take advantage of that, rather than just trying to buy stock in every bloody EV startup that goes public. Because as we've seen, that's a terrible idea. And in my investing career, I've made a lot more money with these picks and shovels type businesses than I have trying to pick the winner in an emerging industry, because that's a lot harder. And this way, you don't even have to pick the winner. It's like, I've never owned NVIDIA as an individual stock. I've owned it in an ETF, but I've never owned NVIDIA. But I've owned Taiwan Semiconductor. That's done really well. I've owned ASML. That's done really well. You don't always have to pick the winner if you understand the other beneficiaries in these like industry-wide booms. And to those of you, I want to sort of finish on this point. Those of you who are bearish on EVs, especially in America, let me tell you, the world's a lot bigger than just the United States. Let me tell you, go to China, you see how many EVs are on the road. Hong Kong, Daryl. This is the listing I have on screen is not the proper listing, but I'm on stockanalysis.com and for some reason they don't have the proper listing on there. I don't know why they've got all these Bangkok ones. But that is the right company, Contemporary Amperex Technology Company. Have we enjoyed this so far? We've got 64 people with us, which always says to me, when we peak at 70 and 64 of you are still here, that's pretty good. So second question, should I do this again? Would we like if I did this again? David, someone did a 2.5 hour Waymo ride yesterday. Cool. Well, maybe we'll make this a monthly thing then. I enjoy this stuff. What I also enjoy is hanging out with you all again in person. So it would be remiss of me if I did not mention Investormania, which, if you don't know, is our live event that we do. We did the first one this year in London. It was an absolutely fantastic day. Bob, I saw it come through. I'm very excited to meet you, my friend. And the Number one, well, actually, there were two complaints people had about the London event. Number one, it was too short. It was only 1 day. People said, can we do 2 days now? I was like, yeah, I can do 2 days. And number two, can we do it in America? And I said, sure, absolutely we can. So Investormania 2 is in Tampa, Florida, May 15th and 16th next year. So you've got a bunch of time to get your tickets, get your flights and hotels booked. Let me tell you, to people who came to the last one, it was honestly so much fun. There was a ton of alpha that we shared. You know, one of the trades that I shared on the day, it was 3 stocks that I talked about. They're up 45%, 55%, and 65% in less than 6 months. So if you're wondering, well, what's the ROI of going to an event like this? There you go. What Anthony shared on the Leaps side of things, I mean, I don't even want to think about how much money that's made people. But we've had some massive winners there. And Anthony will be back next year. I'll be there. Hopefully Miles will be there as well. Diane says, will Ivy be attending? I can officially announce that Ivy will be in attendance. I don't know what she'll be talking about yet. Possibly the economics of Tony boxes. Shout out to Tony boxes, by the way. Those are fantastic. And we're going to have a lot of fun as well. You know, so we're going to do a day of talks. And then we're going to do a day which is going to be like just a big group activity, a bit more informal, just more hanging out, getting to know each other a bit more. That's where like the real magic is at these events. Rich, it is called a Tony box. It is a screen-free entertainment device. Bob, I think a few people are staying at the Barrymore Hotel. I believe Richard is as well, aren't you? Richard, I hope I didn't dox your hotel of choice. But if you are interested in coming along, you get your tickets there. Like I said, we will also be doing a bunch of like pre-event stuff where everyone who's got a ticket will be invited to a bunch of virtual events, a bit more like this, but smaller group. I can go into specific topics in a lot more depth. But I hope to see you all there. We've got an awesome venue, by the way. I want to see if I can find this. We got a fantastic venue. These guys will be helping us host it. So my big thing for venues is I refuse to do windowless conference rooms. I absolutely hate it. I don't think it's a very enjoyable environment to be in. So we've got this, we've got the Armature Works. So we've got this venue booked for the day. The reception the night before is going to be at a brewery. All of it in downtown Tampa, so distance isn't going to be an issue. It's not like you're going to have to go an hour each way or anything like that. And yeah, a lot of fun to be had. Still sorting the group activity. I've got some ideas. Looks like the after party's at the Barrymore Hotel by the sounds of it. Is Shaquille coming? Visa permitting, yes. So that's the plan, but we're sorting it out right now. So I don't want to make any promises, but me and Shaquille are working on getting him over there because he's a bloody legend and he deserves to be part of it. But Donald says London again in 2027. I don't know, is the honest answer. What I will say is though, like I may just do like some more informal stuff in London. like not even like a formal event, just like a group of like, I don't know, 20 or 30 of us getting together for drinks, like once or twice a year, just because it's fun. And I can listen to David's stories. That's it's selfish. I just want to hear David tell me stories because he's an interesting guy. He's lived a fun life. Pankesh, if you're watching, I want to hang out with you again. Helen, I tried to get a group rate for these hotels, and I'll be honest, I didn't realize how group rates worked. And they wanted me to put up a ton of money up front. And I was like, that doesn't sound like a great deal for me. so I did not. But hopefully as these things get bigger, we can just do like a partial buyout of a hotel, which is an idea that I do have for a future event. Like I used to attend these publishing events in Cancun every year, where we would get like a big block booking in just an all-inclusive hotel. That was a lot of fun. But these events do take a lot of work to organize, and we put a lot of effort into them. And to those people who came to the first one, please just let everyone in the chat know how much fun you had. And if it was worth it as well, let me know if it was worth it in the chat, because I want everyone to get ROI from these events. What else we got? Let me see if I can. What is this? Yeah, so this is the building we're hosting it in. I think that was Anthony. Shirtless paddleboarding. So yeah, it's going to be a lot of fun. Hopefully it won't be too humid. But yeah, David, you know me. Like my one rule is we're not doing windowless conference rooms. Like stuffy hotels, like it's just not very fun. So I like having these like more interesting venues. The one we had in London was incredible. A lot of fun, good food, people enjoying themselves, and like it just makes more sense that way. So yeah, Investormania 2026. Get your tickets. If you're on my email list, you will be hearing a lot more about this over the next 6 months, because we've still got 6 months to go. So it was 6 months on Saturday, I believe. Helen says we should all paddleboard together. Oh my God, that would be so much fun. I did discuss it with Miles, and he said that he's got a homemade speedboat that he's going to go around and create wakes so we all fall off our boards. That was just what he said. I can't. I can't wait. Miles, is your display pic on YouTube bottles of Coca-Cola? You legend. Oh God, did we have fun today? This was a lot of fun. Let me know in the chat if you had fun. Fantastic. Souvenirs from London. I love it. You're very welcome, my man. You'll be definitely meeting Ivy. I'm so excited to meet you too. You've been a great member of our community for the last 3 years now. Fantastic. Right, everyone. Stay safe. Stay healthy. The replay of this will go up, by the way. So have a fantastic rest of your day. Enjoy yourself. And I will see you all. I'll see you in CGM on Tuesday. Options Gang. God, it won't be until January, Maybe I'll jump on one of the Monday calls. We'll see. Take care, everyone. Stay safe. Good night and God bless. Bye-bye now.